At a time when there is so much anger in the streets of America over Wall Street greed and corporate corruption, we begin tonight with one of the biggest Wall Street insider trading cases ever. At a time when many Americans were losing their 401ks, prosecutors say Rajat Gupta was leaking secret corporate information to a hedge fund tycoon so that tycoon's fund wouldn't suffer the same fate. Gupta was in a perfect position to do that inside the boardrooms of some of the country's biggest corporations. The result, prosecutors say, was that the hedge fund made millions while ordinary Americans got soaked. Justice correspondent Bob Orr has our story.
As a board member for Procter & Gamble and Goldman Sachs, Rajat Gupta regularly heard sensitive corporate secrets capable of moving stocks up or down. But federal prosecutors say Gupta often shared that valuable inside information with convicted hedge fund trader Rajaratnam. An indictment unsealed today charges Gupta with conspiracy and 5 counts of securities fraud. Jacob Frankel is a former enforcement chief for the Securities and Exchange Commission.
The overall case, by far, is probably the biggest insider trading prosecution ever. This reaches directly into 2 of the top corporate boardrooms in the United States.
Prosecutors say at the height of the financial crisis in 2008, Gupta provided a stream of tips that helped Rajaratnam turn quick profits and avoid millions of dollars in losses. The indictment, built on wiretaps and phone records, claims Gupta often passed inside information with stunning speed. For example, prosecutors say on September 28, 2008, Gupta called Rajaratnam just 16 seconds after completing a Goldman Sachs conference call. Gupta allegedly told Rajaratnam Warren Buffett's Berkshire Hathaway was about to make a $5 billion investment in Goldman. Minutes later, before the markets closed and before the Buffett news was public, Rajaratnam bought $27 million in Goldman stock. The next morning, Goldman's price jumped $3 a share. Rajaratnam cashed out with an $840,000 profit. Gupta is the former chief executive of the global consulting firm McKinsey & Company. The Indian-born businessman has extensive relationships with corporate CEOs and charitable foundations.
But India needs that kind of growth.
And he's used his voice around the world to encourage job creation. But prosecutors say Gupta, who appeared in court late today, openly flaunted securities laws. In a statement, his attorney called the charges baseless, saying Mr. Gupta is innocent. He has always acted with honesty and integrity.
Tonight, Gupta is free on $10 million bail after pleading not guilty. He's not accused of directly profiting from the inside information that he allegedly passed on, but if convicted, Scott, he faces a maximum of 105 years in prison and millions in fines.
Thanks, Bob. Hedge fund manager Rajaratnam was sentenced earlier this month to 11 years in prison, the longest term ever for an insider trading case.